What up, ladies and gents? What up, ladies and gents? Hope you're having a fantastic day. Before I get into this video, I want to say a big thank you to the 600 plus people subscribed to this channel, bro. It's mind-blowing, you know. I just wanted to share my journey and the things I've learned, but for some reason, people are interested, and that really honors me. So thank you guys so much for all the support, all the comments, all the interactions. It means a lot to me. So in this video, I'm going to share all the progress I made on my FTMO challenge. It was a pretty interesting one. I learned a lot, and I'm going to share every single one of the losses that I took. And this is why. You know, when I learned ICT concepts, I was like, if this thing can be this precise, then what is the nature of the losses you can take, right? So after finding my model, it's one of the questions I asked. Under what circumstances does this thing fail, and what do I do about it? What are the losses I can improve and avoid, and what are the losses I can't avoid? And in this video, I'll give some answers to that question. Now, I don't know how many people who watch these videos are interested in using my model, but regardless, I think there's some value in understanding under what circumstances ICT concepts fail. So I hope you guys enjoyed the video. Please like and subscribe if you do, and yeah, thanks for watching in advance. Okay, ladies and gents, so this is all the business I did on the FTMO challenge. Took a lot of losses, and then 2 good trades brought me out of drawdown. This was another loss, and when I got out of drawdown, I took another loss and decided to stop trading to wait for the free repeat. Today is currently the 7th of April, but I decided to stop trading and wait for the free repeat on the 11th of April. Okay, so I was looking for the number of trades, and it's actually 11 trades. Yeah, because I was taking like 1 trade per day for each of the minimum trading days, something like that. But here you're going to see 24 trades. I actually counted on my MT4, and it's 11 trades, of which most of them were losses, and that's where I think is interesting. So if you trade ICT concepts, or if you trade with my strategy, I feel like you get some value from the lessons that I learned from all these losses, because it wasn't a problem of the strategy. And oddly enough, it wasn't a problem with psychology either, because if I can pat myself on the back for anything, this challenge was very frustrating. So the fact that I didn't lose, I didn't, try to do anything extra, I stuck to the same strategy. I only executed when I saw something that was in line with my model. I'm proud of that. The problem, however, was I missed out on a lot of good trades. Sometimes because there was this one trade that I actually posted on the community tab. A trade that I took on demo because I told myself I was not going to trade for the rest of the day, and there was a beautiful opportunity, but I decided to stick to my rules and not trade because I was having a terrible day, So there were these type of things, some trades that were unfilled, some trades that I simply missed because I was away, and overall I was still able to stick to the plan and not overtrade, not revenge trade or any of that stuff. So I'm pretty happy with that. So there's not much information, nothing interesting on the on here. So I'll get on the charts and I'll use the MT4 to share the trade that I took. Especially the losses, one after the other. So I'll share exactly what went wrong in each one of them. Yeah. So I'm only looking for trades in the London session, well, the London kill zone, the ICT London kill zone, which is from 2 a.m. New York time. I'll bring the vertical line right there to 5 a.m. New York time. It's in this time window that I'm looking for my trade setups. And I'm looking for a liquidity grab to happen in this time window or in the Asian session. The interesting thing, however, is while I only make entries in this time window, the narrative can, however, form outside of this time window. Well, part of the narrative, at least. So this is what I'm looking for, right? And bear in mind, this is bare bones of the strategy. I'll develop it as I go along, like I currently am, with things like this video and experience. But currently, this is what I'm working with. So here we have the midnight open candle. There's a midnight line, New York midnight open, right? And here we have the London open kill zone. So if the narrative wants to start in Asia, I want to see a liquidity grab on the other side of the price take liquidity on the other side of the midnight open. For example, here we have buy side liquidity up here, which means that in the Asian session, if I see something like this, price coming up to take the liquidity, that is the start of the narrative. However, I wouldn't want to see the point of interest, which could be a fair value gap or the breaker block form, except in here. I'm only looking for the market structure shift and the fair value gap that I'm using for the point of interest to form inside this London time window. So if we had something like this, I wouldn't use this price leg to find the entries. You get it? Okay, so in this case we didn't even have that situation, and that's what I actually love to see. This is what we had in this case. Price came up, stalled, and then the London open took the buy stops, the buy side liquidity from here, and then did a market structure shift. Let me delete all these lines so we get more visibility. So I can delete this. Okay, so now we're just waiting for market structure shift. Did you see that? Right there. So here, price took out this low, and that's a market structure shift. Now I'm just waiting to see what candle forms, because we can close in this price leg completely, and that wouldn't be my point of interest, right? The next candle, however, does this. Gosh, the connection. So here we've left a big fair value gap here, and we've closed below this down close candle, which is the breaker pattern. So we have a high, we have a higher high, and then price broke this low, which makes this down close candle, this one, a breaker block. So price breaking below this low makes this down close candle a breaker block. So I mark the breaker block like this. You see, now we have a fair value gap above the breaker block, and the breaker block being below the fair value gap means that price doesn't have to come up here for me to find my entries. I can simply use the breaker block to find my entries. Breaker block. Okay, so now all I have to do is wait for price to come in there, and then I'll find my entries on the 1 minute time frame. Okay, so here on the 1 minute time frame, all I have to do is wait for price to get in the point of interest, and then I can trade. Time is currently 3:29. Price gets in here at 3:42. Now I'm just waiting for a market structure shift to displacement, and then I can trade, use my entry on the 1 minute time frame. So we don't break this low, price forms another low down here, and I'm still waiting. So if the price breaks below that low, but we don't have any displacement, which means I can't trade. And then big candle. So we have a displacement, a market structure shift by price breaking below this, breaking this low and that low, and now I'm only waiting for price to get. So you can see a small fair value gap in here, right? Small fair value gap here, but there's a bigger fair value gap here, and I used this one actually for my entry. So all I have to do is, short position right here, put my stop loss above here, and then target the 3 RR, right? Like so. Pretty easy. Price picks up my order right there, nice black candle, and then stop loss. Okay, so look closely at what happened here. Everything was in line, but price came up and hit my stop loss. Now watch this thing that happened afterwards. Price comes back into the point of interest. Can you see that? Breaks below this low, market structure shift, nice displacement, leaves a fair value gap here, like so. Change this. Leaves that fair value gap there. Fills it in right here, and then does this. Nice big drop, big price delivery, and I don't get to participate. So I'm looking at all this live and I'm like, what is going on? Why did this happen, right? Why did price create this first leg, fail, and then create a second leg and actually work? Perfect price delivery. This is what I'd be looking for, right? But then I got tricked into this trade, took a loss here, and then this one worked. Now, if anybody has any ideas, I'd love to hear it because I'm also learning here. But my only theory is time. So I've noticed specific times where there's more volatility in the market than other times. 9:30 a.m. New York time, 10 a.m. New York time, and 3 a.m. New York time. I didn't know about 4 a.m. New York time. But on the Nasdaq or the S&P 500 over the indices at least, I've noticed that there's a lot of volatility that sometimes price can create a false setup that doesn't work out and then later create another setup that actually works out. I've seen this a few times, so I can't say that's a fact, but that's the only theory I have for this not working out. So as you can see, this was a very painful experience because if this didn't happen, then I could gladly participate in this trade, right? So that was pretty painful. That was the first loss I took, and now let's move on to the second one. Okay, so now let's check out the second loss that I took here, and then I'll explain why that happened. So I basically the same idea, 1 minute time frame, waiting for price to get inside the breaker, which is the blue zone here. Price gets in there, waiting for market structure shift. Okay, so we have a market structure shift right here. You can see price broke below that low, down there. So price breaks below that low. I'm waiting for displacement. Nice displacement. We have a small fair value gap in here, but then we have another fair value gap here. So I confidently just put my position here, put my stop loss above here to cover for both fair value gaps. And then this happened. Price picks up my order, big candle, I'm happy, we're about to sell off, I'm glad, blah blah blah. Time is currently 2:56, and I could have moved my stop loss below this low because now we have a fair value gap, we have an order block down here. So I could have moved my stop, but because we didn't fill this fair value gap, I was like, it's possible that in the equities open, price takes out this high, fills in this gap, and then sells off. And sweet summer child, this is what we had. So the equities open prices, this is 3 a.m., which is the London equities open. Price plays around a little bit. I'm still hopeful. Big candle gives me more hope, back in profit, and then hits my stop loss. Hits my stop loss and does this. See how price took out all these highs and poked into the fair value gap, which was the point of interest inside the breaker. Not above it, but inside the breaker. And then look at what they did. And I watched all of this happen live. Okay, so here we have price hitting the fair value gap, market structure shift, taking out that low and leaving a small fair value gap in here. And I'm watching this live and I'm like, there's no way something similar that happened yesterday happens again, where the first setup is a loss and then the second one actually wins. Fills it in right here, and what do you know? Nice price delivery. I'm not gonna lie, this was very painful to watch because this would mean that I've been unlucky twice. If price didn't get in the breaker or if it didn't create this false setup, I wouldn't have traded. But funny thing is I had to take this loss twice in order to figure out what was the problem. The second time I took this loss, it was like, okay, it felt like deja vu. Price comes in the fair value gap, in the breaker block, creates a false setup, stalls, hits my stop loss, and then bam, goes into the fair value gap inside the breaker and sells off. So now I've established that if the fair value gap is inside the breaker, I do not trade the breaker. I wait for price to get inside the fair value gap. So I don't care what's happening here, I'm waiting for price to get inside the fair value gap. If it's above the breaker, then I can use the breaker for a sell trade. So that's what I learned. And this is what happened on the second trade, the second losing trade that I took on the challenge. Okay, fellas, so even before I share the loss I took on the same day, which is the third loss, the Tuesday the 28th of March, I'd already taken a couple of break-even trades, which was also very painful because I was right, but then price just goes and hits my stop loss. And it's not like I moved the stop loss too early, it's just random things that I don't yet understand, right? But on this day, same idea, price gets into the breaker. This was a breaker. I just don't want to go back and show the whole 15-minute business. Should I just okay, I'll just show, fine, I'll just show what that looks like on the 15-minute chart. Breaker, So this is what we had. Same idea, liquidity grab, market structure shift, breaker block, fair value gap above the breaker, and I'm waiting to sell. So you can see it sold off pretty nicely. But then this is what happened. Price comes here, market structure shift below this low, right there. Price leaves this fair value gap, and it doesn't get filled. So, you know, there's a lot of these very frustrating things that happen while doing the challenge. And, you know, that's why I'm happy, because all of these things could have really messed with my psychology. This was a very nice price move, but it didn't get filled, and I can do absolutely nothing about it, right? Maybe in the future I can have more, when I have more capital, I can say, okay, I don't have to wait for price to get in here, I can just sell on this candle, and then when it comes here, add another position like ICT does. But currently, I need a strict set of rules. I'm not gonna get carried away. Let me just show you what happened in the other trade that I took a loss on. Okay, fellas, so this is the third loss, the one I was talking about. Um, is it the third? I mean, am I counting it right? I think so, yeah. So this trade was very, very painful. Gosh. So as you can see, I missed out the opportunity here. Price came all the way down, took out the low of the previous day. So this was a bit ambitious, because we've already had a big run. It's currently 4 a.m. New York time, and price has left this fair value gap. But I was hoping for continuation in London to take out these lows, which could have been possible. So technically, this also fits my model, except yeah, things didn't go very well here. So after taking out significant liquidity from all this consolidation coming down here, price comes in there on the, well, there's the fair value gap. So let me go to the 1 minute time frame and show what I was waiting for. Price gets in the fair value gap. We have this low here, so I'm waiting to see that taken out. And now the low is here, waiting to see that taken out. And now the low is down here. So let's keep watching. Big market structure shift. Price takes out that low, leaves the fair value gap. Now I'm waiting to see price come in this fair value gap, but then it didn't, you know. And look at this, right? So it came down, just kept coming down all the way down, and yeah, and I'm still waiting. So at this point I should have let go of the idea, because prices come all the way back down, you know, and we've already taken significant liquidity, the low of the previous day. We've already had a big move in London, so there's a high chance that price consolidates, and that's something I can only know now from experience. But I get filled in here, price puts me slightly in profit, and then eventually my stop loss was above here, by the way. Yeah, so even without putting it there, you can see price just smashed through my stop loss, and yeah, it is what it is. And as you can see, we had a consolidation because price had already taken significant liquidity, and currently time was around 5 a.m. New York time, so the London kill zone was actually over, and that's what happened. This loss really hurt me, and it's because of this loss I missed out on the trade later in the day, because I was devastated. I was like, I mean, the emotions do come, you know. The problem is not the emotions, the problem is how we react to those emotions. And on this day, I decided I was not going to trade for the rest of the day. I was going to take the time to review my losses, to journal, which I didn't even do, but I just took some time for myself, right? And decided that even if I saw a setup, I'd take it on my demo account. And guess what? The demo account made me a lot of money. So that was a very frustrating experience on the 28th of March. And a lot of things like this kept happening on the challenge. Let's go to the next one. So there's something important that I forgot to point out that I have to do now. The fourth trade was not taken in the London session like the others, it was taken in the New York session. But the rules of engagement are pretty much the same. I look at the New York session from 7 a.m. to 12 p.m. New York time. So the liquidity grab that I want to see can happen from 7 a.m. onwards, but then I don't engage until 8:30 a.m. 8:30 a.m. New York time, right? Kind of like the same. So this trade I took, I think at 11. I got involved at 11:57 actually, 11:57. So very close to the launch hour, but I still got involved because it fit my rules. And yeah, let's keep going. So here we have a classic example of the other losing trade that I took on EU. Was it EU? Yeah, I think. So when I said I had to take this loss twice in order to learn, this is what I meant. because I didn't know, most of the things we learn in trading we learn from experience. So here we have another case of a fair value gap inside the breaker, right? But before this event, I was like, I mean, it happened in the first situation, but am I really sure this thing's gonna happen again? So when price hits the breaker, I'll trade. That's what I said to myself. Now let's look at what happened. So 1 minute time frame. And it's amazing, even though I took a loss before, I took a win right after, because this time I had learned from the previous experience, right? So waiting, price hits the breaker, and almost poetic market structure shift when price takes out this low, leaves a small fair value gap here. I put my position here, risking 0.5% again, stop loss above here, and then hoping to sell for 3R. Picks up my order and then fails. When I was watching this, I'm like, damn, bro, there's no way this happened to me again, right? And I was like, I'm not gonna miss out on this opportunity, because I knew for a fact. Well, I mean, of course, nobody knows what's gonna happen, but I felt within me that this is gonna happen again. So when price got in there, I'm just waiting and I'm watching and I'm waiting and I'm watching and waiting to see a market structure shift. And there you have it. Market structure shifts, displacement, leaves a fair value gap, and boy, did I take advantage of this. So put my stop loss up here, and yeah, that's the trade I shared in the community tab. Beautiful price delivery. So you see, there's always something nice to learn from experience. Very nice price delivery, gave me a 3R just like I wanted, and yeah. Okay, so this is the last important loss I took on the challenge. So after taking this loss, I took the win that brought me out of drawdown, and then I decided that if I take another loss, I'm done. The last loss I took was fair. There was nothing I could have done about it. So I think I'll leave that one out and focus on this one right here. When I say fair, it means everything fell in line and it failed regardless. We had a consolidation for the rest of the day because we had high impacts news later in the day, and that's something that I'll only learn when I incorporate more fundamentals in my trading and know how to, react. It wasn't NFP, that was last Wednesday, I think. Today's NFP, but is today even NFP? I mean, today's Friday, 7th April, but yeah, it could be. But yeah, that was Wednesday, and there was high impact news. I don't know which high impact news it was, but price consolidated, and I took that loss because I was part of that consolidation. However, this loss that I took was a result of, it was something that prompted me to make that rule that I want to see the liquidity grab. I can see the liquidity grab happen in Asia, but I want the point of interest to be formed in London. Look at the time here, it's 1:30, right? 1:30 candle. I entered when price came in here at 2 a.m. New York time, right? So price comes in here into that fair value gap. So let's find everything on the checklist. Liquidity grab takes out these highs, market structure shift, and then price comes in there at the London Open kill zone. Right here, does a market structure shift. It's right here. So if you can see it, market structure shift, leaves a small fair value gap, and that failed beautifully. So yeah, that's what happened. It was something that I didn't know because due to a lack of experience, but it didn't really matter. I'm learning, and all these frustrating things that are happening now that I'm at the start of the journey, it's fine, because knowing how to handle them means that if I can learn something from them, I'll be in a better position in the future. That's what I believe trading is. So all of these things are good. This is what happened afterwards. As you can see, price left this fair value gap. We had this breaker block. I don't know if this trade was even a breaker trade or a fair value gap. Let's check it out together. So there's a breaker here. There's a fair value gap inside the breaker, flashbacks. So I'm just basically considering the fair value gap. Turn this off. Time was 2:30, and now we wait. Oh, price expanded. Price expanded further. I was getting a bit annoyed, like, where's my trade, man? So as you can see, there's this high, there's a low, and there's a high. right? So price making a series of highs and then breaks it and then breaks this high. Why am I making this confusing? What's the breaker pattern? Okay, let's check it out together. High, there's a low, and there's a high, right? So this is a breaker. This candle becomes a breaker block, right? So that's what I used as my point of interest. So this is the trade that took me out of drawdown. So this is a trade that took me out of drawdown. I'll show what that looked like. Price coming back down into the breaker. So see this classic example. Price above this fair value gap, that fair value gap. Oh, I mean the breaker above all of that means I can use the breaker for my trade. Price comes in there, 1 minute time frame. You know, this was God sent, man. It was just beautiful. We have this high here. Overshoots it a little bit, but it's the 1 minute time frame. I don't really care. I only care about the 15-minute time frame. Price leaves this high here. Nice market structure shift. Leaves a fair value gap here. Leaves another fair value gap there. And put this here. Put my stop below here. And the price delivery was wonderful. So fills it in here and then rallies. So this is a trade that took me out of drawdown. And yeah, I was very happy to catch this because, gosh, I'd been starving for setups like this for such a long time, you know. And yeah, now I'm here. I took another loss after, like I said, I've already talked about that, but yeah, that was a fair one. And perhaps that was a sign from God that I should take a break, get to journaling and making this YouTube video, and you know, just start a free repeat next week, God willing. I love this journey, man. I love trading. I love all the things that are involved, and I love that I've really understood the value of trading psychology, that none of these things frustrate me. I like where I am, you know, I like the position I'm in. One other issue I had was, like I said, the risk management. I'm gonna do 1% instead of the dynamic 0.5% to 1% because there's no point. I don't get that many trades, right? So there's not gonna be a problem of over trading. I only took 11 trades on this in the entire 4 weeks. If every single one of them was losses, it's even, you know, I mean, for FTMO that'd be like 10% drawdown, and I'm not gonna take 10 losses in a row, right? Like that's not gonna happen. As long as I'm patient and waiting for the right setups and not rushing into the wrong kind of setups, I can pass this challenge. I believe I can, and I'm not gonna give up. I'm gonna keep pushing until I pass my FTMO challenge on the 10K accounts, and then, you know, move on to bigger things. Thank you for watching this video. If you made it to the end, I really appreciate you. I hope you learned something from my experiences, and I love you all. God bless you. Have an amazing rest of your day. Bye.